Ladies and gentlemen, good day and welcome to Genus Power Infrastructure Limited Q4 FY22 earnings conference call. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jitendra Agarwal, Joint Managing Director of Genus Power Infrastructure Limited. Thank you, and over to you, sir.
Good evening, ladies and gentlemen. A very warm welcome to the quarter for financial year 2022. I have Mr. Kailash Agarwal, Vice Chairman of the company, and SG, our Investor Relations, along with me in this call. The results and investor presentation are uploaded on the stock exchange and company website. I hope everybody had a chance to look at it. So, few highlights. Revenue of quarter 4 2022 was impacted by lower capacity utilization due to shortage of semiconductors and other critical electronic components. However, we have secured our supply requirements for semicon for financial year 23 and thus expect a robust rebound in revenue in coming quarter on back of robust order book and healthy order inflows. We have recorded sales of 181 crores for quarter 4 FY22 as compared to 196 crores in quarter 3. For quarter 4, EBITDA stood at 19 crores as compared to 21 crores in quarter 3 FY22. Higher raw material prices and lack of operating leverage due to lower capacity utilization resulted in lower operating margins of just 10.6%. Profit after tax stood at rupees 11 crores, up by 34% on sequential basis, as against rupees 8 crore in quarter 3 of FY22. In December 2021, we have received orders worth about rupees 325 crores across exports, geography and domestic geography. Within domestic geography, orders have been received for smart meters across multiple state electricity boards and some orders of gas meter boards. These orders will be executed over the next 12 months. In April 2022, we received a LOA for appointment of advanced metering infrastructure service provider, including design of AMI system with supply, installation and commissioning of 1 million smart prepaid meters, along with DD meter, level energy accounting and FMS of these 1 million smart meters from a state utility of Bihar. The total order worth rupees 828.57 crore net of tax is the single largest order finalized by any state utility in India for AMISP to a private company like Genus. As on 12th May 2022, our order book before adjusting for revenue post 31st March 2022 stood at 1908.20 crore net of taxes. The impact of reform-based result-linked power distribution sector scheme can be felt on ground as almost every SEB has come out with inquiries and floated tenders for installation of smart meters. Thus, we anticipate robust order inflows in financial year 23. With the RDSS scheme, the central government has done away with one-size-fits-all approach of previous schemes. Most of the apprehensions of SEBs has been addressed by customizing the policy guidelines as per their respective specifications. Thus, all stakeholders on board and the rollout of the smart metering scheme across India is anticipated to be a very smooth affair in the times to come. With the implementation of RDSS, we expect the entire landscape of the Indian metering industry to drastically change with multifold jump in the annual industry size. This will also lead to momentous shift from conventional meters to smart meters in Indian metering industry, thus enabling much improved operating margins. In a smart meters, company will also have a lot of opportunity in terms of recurring revenue as facility management system provider because all the contracts have FMS in their contract. We as a company are specifically targeting recurring revenue as an avenue for sustaining our growth. Further, the CapEx model is now getting increasingly accepted among SEBs, wherein the CapEx will be undertaken by AMISPs, also known as system integrators, under the design, build, finance, own, operate, and transfer arrangement, DBFOOT. From the monthly savings made in more than account of the smart meters, the SEBs will undertake monthly payments to system integrators for a period of 6 to 8 years, known as pay as you save model. All these developments will culminate into robust order inflows, healthy top-line growth, better operating margins, as well as much improved working capital cycle for coming 6 to 7 years, starting from financial year 23 for the Indian metering industry. We plan to play dual roles of being a system integrators ourselves, as well as being vendors to other system integrators for the smart metering requirement. We have continued to focus on technology upgradation and operational efficiency to serve our long-lasting relationship with our clients, which has engraved our leadership position. We are confident of significant improvement in our business operations in financial year 23, provided there are no further COVID-19 related shocks. We can now open the line for Q&A. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Mohit K. from DAM Capital. Please go ahead.
Hi, good afternoon, sir, and congratulations on a decent set of numbers in Q4 and winning and building a large order book. So my question is, given the order book of 19 billion now, what is the kind of revenue is possible in FY23, and what is the life cycle of the orders?
So we have given the guidance earlier also, and we shortly maintain the same guidance that financial year 23 will be around 100 crores. This is what we have given the guidance earlier, and shortly quarter on quarter you will see improvement. So things are becoming better. The electric component shortage is also improving. Whatever the work we have done in the last 6 to 9 months will start showing from next quarter onwards. So you will only see improvement in quarter on quarter basis. And you asked about the lifetime of this order. So if we take this order book currently, what we have in hand, around 2,000 crores. Out of this 2,000 crores, you can see that around 1,000 to 1,200 crores are to be executed in next 12 months, and remaining of orders are of FMS installation will be executed over the period of time. So this is how you can differentiate between the order book. Hello?
Mr. Mohit, we are not able to hear you.
Hello?
Yes, sir. Are you able to hear us?
Can you hear me?
Please.
Yes, I can.
Sir, please go ahead.
Hello? Yes.
Yes,
So my second question is, sir, on the EBITDA margin. Given the input inflation, given the chip shortages, do you think there is a risk to our margin profile, or do you think the margin can expand from 10ish to around improvement in the? Is it possible to improve the improve the EBITDA margin going forward, given that our sales are expected to increase in FY23?
So from the current level, the EBITDA margin will improve significantly. And so I don't see any challenge in that. And whatever the guidance we have given earlier, around 16% of EBITDA margin, we are pretty confident of achieving that 16% by the end of this financial year.
Understood. So my third question is on the order opportunity. Of course, we have heard that many of the states have now got the funding, and many of the tenders are awaiting closure. So are you expecting heightened activity in the next 3-4 months? And can you please throw some light on which are the tenders which you expect to get closed in the next 2 to 3 months?
I can just give you a brief guidelines of where the industry is standing today. Currently, only on the supply part, we have live tenders worth 550 crores. And only on the OPEX part, we have live tenders worth 3,000 crores. And for the conventional meters, we have live tenders worth 1,140 crores. So these are the tenders which are already been quoted. So currently, we have quoted tenders which are live, which are already being quoted is to the tune of 4,650 crores. And the tenders which are already out and which will be quoted in next 3 to 4 months and autumn will be decided in further 2 to 3 months. So almost worth 25,000 crores OPEX model tenders are out in the market. And only for the supply of smart meters, worth 1,100 crore tenders are out in the market, which will be quoted. And only meter supply tenders for conventional meters are around 400 crores. So in total, you will see around 26,000 crores of tenders are open, which will be quoted in next 3 to 4 months and will be decided further. And almost to the tune of 4,650 crores tenders are already quoted, which are live and running, and they are at different stages. So we see definitely in next 3 to 6 months, order inflows should be very healthy.
And so given the fact that we can do only so much in TOTEX mode, are we tying up with different bidders so that we can do a far better supply in coming years?
So Genus will be playing the dual role, as I said during my opening remarks also. Genus is going to be one company which will be playing the dual role where we will, and what we are doing currently also. We will be suppliers to this AMISP as technology providers, as a meter provider, communication provider, or end-to-end solution provider. And on the other side, we will be also doing our AMI as Genus, the way we have taken order from Bihar State Electricity Board. So Genus will be playing both the roles. So we are very closely working with our partners across the country where we'll be playing the dual role, and we'll continue to play the same thing in the future, which will give us very healthy business also and good balance of being a AMISP provider and being a manufacturer.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Anshuman Ashit from ICICI Securities. Please go ahead.
Thank you for the opportunity, sir, and congratulations on the large order win. So my first question is related to the order itself. So when do we expect to start the implementation of the order, and can we assume a 60-40 capex OPEX mix for that? So 60% of the total order size to be implemented over the next year through capex, and 40% over the subsequent 8 years. Will that be the correct assumption?
So that assumption is not wrong. That is mostly correct assumption, 60-40. And this order implementation of this, because we have to do a lot of survey, and so it was the way the government gives. They give us 30 months for the implementation of these projects. So we are also planning accordingly. So we will start seeing on the ground maybe the first installation from the month of September, not before that, September, October.
Okay. And it's a 10-year implementation. 4
to 5 months to start working on the ground.
Okay. And so the margins which we will be making in this order, so definitely it should be much better than what we have clocked in Q4. Any thoughts on that?
Yeah, because all our old orders are slowly and gradually getting finished. And mostly in the first 2 quarters of this financial year, all the old rate orders will be finished because the industry was going through a very tough margin cycle. So prices have increased. Definitely that benefit will be visible from quarter 3 of this financial year. So margins will definitely not be the way it is currently. It will be far better than where we stand today.
Okay. So what is that legacy low margin order book that we have currently? So in Q3 you had mentioned that only 25%. Yes.
So we have some old orders which are getting completed, but by the end of first 2 quarters, I think most of our old orders will be closed.
Okay. Sir, in Q1 this year, has our capacity utilization improved over Q4? And what was the level for FY22, if you could just give us that number?
So FY22, our capacity utilization was very low, like clearly visible in the numbers. And even quarter 1 and 2, you will see improvement every quarter. But I don't expect quarter 1 and 2 to come to the level where we should be at quarter 3. So quarter 1 and 2, you will see improvement every quarter, but yes, the things are getting better. Specifically from July onwards, I am seeing a lot of things improving significantly from July and August onwards.
Okay.
With the component shortage, whatever the planning has been done in the last 6 to 9 months, those results will be visibly open in the front of us from August onwards.
Sir, have we started receiving the semiconductors which we had tied up for FY23?
So, as I said just now, you will see, yes, things are getting better, but not to the level where we expect it to be. So from August onwards, I think semiconductor availability will be much better than where we are standing today.
Okay.
So first 2 quarters will be, you will see improvement every quarter, but yes, first 2 quarters will be not the same level where we expect it to be.
Okay. And sir, with this large order book that we have, so going forward, you have mentioned that around 26,000 crores worth of orders will come in the next 3 to 4 months. So
tenders will be floated. Yeah.
Okay, tenders will be floated. So do you think that we'll be able to maintain our market share in those tenders?
So yeah, only being a supplier, we have been maintaining a very healthy market share. With the industry going leaps and bounds, to maintain this market share will not be easy, but definitely will play our leadership position. So that is the reason we are focusing our business in a way where we are playing the dual role. If we focus only as a AMI-SP provider, then we can't maintain our such kind of manufacturing market share when it becomes too large.
Mm-hmm.
So we'll be playing both the role, and our market share will be healthy, and we will maintain our leadership position. This is what I can say confidently.
Okay. So on this AMI order, do we need to build any capability on the ground level? So what capabilities do we have currently, and what are we aiming to achieve over the next, when we start the implementation of this order?
So it is, some capabilities are definitely will be added, but not much, because Genus has been focusing on this kind of work from last 3 years. It's not that something suddenly very new has come to Genus, which they have not done ever before in terms of technology, in terms of implementation on the ground. It's just the finance model which has changed. If you see a project we have already done worth 350 crores in Rajasthan very successfully. But that project was called as a CAPEX project, where the 70% was CAPEX and 30% was in estimate. And the project what we are going to do now in this large order, this AMI-SP, only the financial model has been changed, where there is less of CAPEX and mainly it is going to be per meter per month. But the technology, the product, the solution, the ground level working is same. So Genus as a company has developed themselves in the last 3 to 4 years in handling such projects. So technology-wise, I am not seeing any challenge at all on the ground. That is why we are very confident that whatever the hard work we have done in the last 3-4 years is going to pay us very dearly in near future.
Thank you so much, sir. I'll come back into the queue if I have more questions.
Thank you.
Thank you so much.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. The next question is from the line of Rajiv Rupani, an individual investor. Please go ahead.
Yeah, thanks for the opportunity. Sir, last con call you had said that You will look at capex in the month of May and June if required. So could you update us on that? Any new capex if required? When will you do that?
So currently we are not needing any capex. So as such, we don't have any small capex. So here and there we keep on doing it as a regular feature of the manufacturing industry, but nothing major we're going to do currently.
Okay, but if that 25,000 crore order book, which is to be quoted in the next 3-4 months, so if we get a good part of that order, so then the new capex will be done accordingly then?
As we have always maintained earlier also, as Genus, since we have a very strong hold in our, because we are a vertically integrated manufacturing company, so we have a very strong hold on our product. So whenever we want to double our capacity, currently we are comfortably sitting at 10-11 million meters annually, which can be expanded to 20-25 million within 3 to 6 months. So whenever we will get such large orders, we will have sufficient time to reach to that capacity level. So that we are not seeing as a challenge at all. Whatever the long-term things which needs to be done, like plant building, that we have done long back. So we are not much worried on the capital expansion. Yes, few things what we are already under, like we are moving from a purely a supplier to a complete end-to-end solution provider. So we are already working on the network operating center, and NOC center will be under the development. So all these work, these are part of our regular work. I'm not seeing these as something different what we are doing. So this is part of our upgradation of technology. So that is continued. I'm not seeing any other major capex currently.
Okay, and my next question was on gas meters. What is the current
Just want to add one thing in the interest of everyone. A lot of investment, when I say NOC center, a lot of investment we are currently doing to maintain all these smart meters on the software side. So there, a lot of work in terms of capex and all this is going on. So, but that has nothing to do directly with the manufacturing. That is more to do with the solution providing.
Okay, my next question was on gas meters. What is the current order book?
Currently, the order book is around 18 to 20 crores, not much. And we are continuously quoting the tenders of the gas meters. We have been, again, very choosy on gas meters. We don't want to just play on the price part. So we have our goals, very clear goals on the gas metering market, and we are very much ahead of our goals, what we have decided for ourselves. I'm pretty happy with the success, with the way the gas meter business is going on currently.
Okay, and my next question was that our current order book is about 1900 crores. So out of that, how much is conventional meters and how much is smart meters?
Primarily it is smart meters. Conventional meters is only around 350 to 400 crores. Exact number I don't have, but yes, it is below 400 and above 350.
Okay, thank you.
Thank you. The next question is on the line of Amish Kanani from JM Financial. Please go ahead.
Yeah, hi sir. Congrats on getting a large order. So my question is, given the, can you hear me, sir?
Yeah, I can hear you.
Yeah. So sir, my question is, sir, with this kind of large pipeline, are we seeing any new players coming to the foray and kind of bidding, or we have these usual, if I remember correctly, our peers being Schneider, L&T, and those type of player only are kind of bidding. And how do you see the competitive landscape in that context? Also, if say all tenders come together, do you think industry has a capacity to kind of bid and execute these large order, or the people who are probably late in the timelines may face challenges in procurement itself? And given the kind of scenario that you mentioned, we do have those electronic those components which are in short supply. If you can give us some sense of how is the situation there. Maybe 1 year, maybe we've been able to procure, but how is the industry coping with this kind of things? Thanks.
Thank you very much. So you asked many things at a time,
yes,
so I think I missed initially, can you repeat it? I'm sorry.
Yeah. So yeah, I'll ask one by one in the areas. See, one is if you can give me the sense of competitive landscape over the competitors, and also if there are any new bidders coming in, sir.
Yeah. So there are two type of markets now. It's very clear. One is a meter manufacturer, which we are currently doing, like companies like Genus, Secure Meters, HPL. So I'm not seeing any new participant coming as a meter manufacturer. So it's quite concentrated with all the players which are already there.
Sure.
A category, B category, C category, but there's new player we are seeing. And imports is more or less no international companies coming in, and imports is more or less out of question.
Okay.
So as a meter manufacturing, we are not seeing any new competition coming up.
Okay.
As AMISP, yes, there are a lot of people, a lot of large companies are also showing interest that these are all large contracts, and you need fairly strong pockets to cater to these contracts. So that is where we are seeing a lot of good companies. Even Adani is taking a lot of interest in the projects. They want to bid some of the projects.
Which company?
Adani, I'm seeing Tata Power, I'm seeing Adani Power, Tata Power.
Okay.
So they are also taking interest in these AMISP contracts. So
sure.
As an AMISP provider, I'm seeing a lot of new players coming in, which was expected. The metering industry was never ready to do this job as an AMISP. Probably Genus is the only company, and only I see one more company, Secure Meters, who are interested to bid as an AMISP. Otherwise, metering industry is playing the same role what they used to play earlier. To provide meters, provide technology.
Correct.
AMISP landscape is completely different. There are a lot of new players that come up.
Correct, sir. Correct. So in that context, sir, if you can also give us some sense, and maybe with respect to the Bihar order that we have won, what was the difference between L1 and L2? If you can share that, how it will give us some sense of how competitive is this market, and how do you see that?
So the difference was pretty handsome between L1 and L2. Genus was quite competitive in that particular case. And one of the reasons the industry is seeing Genus to be very competitive because we have the complete hold on the technology. So that is where the will play a major role in this landscape.
Sure.
Because we know that, and that is the reason if you see in Bihar, there were two tenders, one for 2.6 million and one for 1 million. So we quoted for 1 million as a AMISP, and we became L1. And the company which became L1 in 2.6 million is also a metering company, which is Secure Meter.
Sure.
So in that sense, you will say that because we are a metering people, we know this landscape better than the typical project companies. So definitely we score over them. We have an advantage.
Correct, sir. So yes, and in that context, sir, you I think did mention the EBITDA margin for this year. I don't want the contract and customer specific margin to understand. But did you mention EBITDA margin to be more in the range of 18 to 20% this year?
No, I specifically mentioned whatever the guidance we gave last time also. Around 16%. I'm more than confident that our EBITDA margin will be 16% in financial year 23. You have to understand one more thing, as I said earlier, that first 2 quarters are going to be very
lower,
difficult. So there will be, so you will see improvement quarter on quarter, but yes, first 2 quarters you will see very much like last financial year. So that is why we are giving the guidance of 16% EBITDA.
Okay. So does that mean that in the second half the margins will be upwards of 20 plus? And that's why we are talking 16, or you think 16 will be the margin in the second half?
I want to give a guidance of 16 at the end of the year, full financial year.
Okay, sir.
So basically you can feel that the last second half will be better than the margins from 16.
Yeah, definitely.
Correct, sir. Okay. And if you can just now explain, the funding mechanism part of the whole thing, if you can just refresh us. I understand there are some sovereign guarantees and all, but if you can give us some sense of, how does it work and stuff like that.
So funding, the way we are, so that, Kailash sir, if you can.
Yeah. And funding basically will be from the company only. If the company has good strength in terms of equities also, that company can get that also. So there is no issues on funding thing. And secondly, as you said earlier also, that 60% will be for the next 2 years.
Correct.
So if we say that it's 800 crores order and 500 crores we have to do in next 2 years, that is the correct part. So there is no big funding is required in that.
Okay. Okay. So you think we are prepared to fund and there are no major worries on that?
Actually, it's not a very big funding that is required because you hardly 450 crores, 500 crores is that too in next 2 years.
Okay. And just to clarify, we need not worry about the financial condition of the states because it is back to back, also given some sort of sovereign guarantees there, right?
Yeah, sovereign guarantee plus these are all going to be prepaid smart meters.
Correct.
Where the first payment will be coming to the AMISP. So I think the payment situation will improve rather than whatever challenges we are facing today, they should get over once this smart meter comes into big time consideration.
Okay, sir. Yeah, thanks a lot and all the best, sir.
Thank you.
Thank you. The next question is in the line of Abhineet Anand from MK Global. Please go ahead.
Yeah, thanks for the opportunity. So I'm pardon my ignorance if I'm asking something very basic, but I just wanted to understand from a macro perspective the whole scheme that the government is running, right? Around 1.5 lakh crore for the deployment of the install and spin of the smart meters, right? Maybe over the next decade. If you can help me break up this number into 2-3 categories, because the whole system will require manufacturers, communication guys, software guys, and then somebody who will be running the whole thing, right? So if you can help us break down into these 4 segments and also in terms of the value that can be assigned to all these.
So it's a very broad question. It's like explaining the whole industry landscape. So there is one way I can, in the interest of time of everyone, I can explain you separately. I can just give you, there will be 4 components. I'll just speak very broadly in this. The government is talking about 250 million smart meters. And we have
so better JK, we can ask SDA, they can throw a mail to us and we can just clarify on that.
Yeah, it will be better because it is, if I have to explain it broadly, it will take a lot of time.
Sure, no issue, sir. I'll send a mail on that. Thank you.
We'll be more than happy to, if a call is required, I will be more than happy to explain.
Sure, sir.
Thank you.
Thank you. The next question is from the line of Shantanu Chatterjee from Mount Infra Finance. Please go ahead.
Thank you very much, sir, for providing me this opportunity. My question is, sir, want to know how much portion of the smart meters that belongs from indigenous components and percentage-wise, and how much we are outsourcing from outside India?
So almost 70% of the raw material is indigenous and 30% is imported. So we are giving the same numbers to the government of India also. So you can say it depends on the different companies have different design, but the ballpark figure what the industry has given to government India is 60 to 70% is indigenous and 30 to 40% is imported.
Okay, sir. Okay, thanks a lot. And want to know, sir, that we have already got a 28 crore order book from a state utility. Which state utility we have got that order, sir?
28 crore means?
28 crore order book.
That is from Bihar State Electricity Board.
Okay, sir. Bihar State Utility.
SBPDCL.
Okay, sir. And sir, my last question is how much opportunity size we are envisaging in our water meter area?
So water meter, we have not yet launched the product. So we are not in water meter currently. I can't speak anything on that.
Okay, we are not exploring any opportunity in that segment.
We are working, but right now we are not exploring anything on water meter.
I see. Okay, sir. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Suraj Navdar from Sampada Investments. Please go ahead.
Hello, sir. Good afternoon. So just a couple of bookkeeping questions, sir. I see our inventory levels have gone up year on year. So what it is that relating to? Hello.
I could not understand. Can you repeat
Sir,
your voice?
Sir, our inventory on the balance sheet has gone up from 177 crores to 220 crores. So why it has gone up so? Why it has gone up?
Inventory, as I've been maintaining earlier also, that we are continuously stocking components. So it is the only reason is that. Because right now it is very difficult for us to do the numbering properly. If something is available, sometimes something is available, sometimes because we are running in a shortage period. So whatever, so this is how it has been planned. So wherever we get something, that is the only reason the inventory has gone up.
Okay. And sir, the investments that
it is a very planned inventory going up. Nothing unusual at all. It is very well planned.
Okay. And sir, the investments that I see of 212 crores, are they in the form of mutual fund and very liquid form that we can access very easily, or they are investment in some companies or something?
That can be all mainly in mutual funds and all. All treasury is easily available all the time to the company.
Okay. And sir, with this AMI SP order, because we already operate on a very long, working capital cycle of 200 days or something. With this AMI SP order, can we expect our working capital cycle to get a bit more longer and leverage on the balance sheet?
No. Basically, it will be lesser because this has nothing to do with the working capital cycle. Actually, it will be monthly rental coming to the company on the basis of the capex what company will be making. So we ideally feel that there will be a reduction in working capital cycle.
So how much will be the upfront investment that we will have to do for the next 2 years, and how much we will get every year? Is there any back of the envelope calculation that you have done?
So basically, there will be an investment of approximately 60% of the order for next 2 years, and and the revenue will be coming within 1 year. Will start coming after 1 year, not after just after 1 year.
So is there any ballpark figure that you can say, okay, we are expecting this much amount of revenue from this order every year as a recurring revenue?
So JK, what are the payment terms?
So yeah, I can. Once we complete 1 million meters, so then we expect around 76 CR per year as a recurring revenue.
Okay. All right. Thank you, sir, and all the best. That's all from my side.
Thank you.
Thank you. The next question is on the line of Anshuman Ashit from ICICI Securities. Please go ahead.
Thank you for the opportunity once again, sir. Sir, you have just mentioned that you will be receiving 76 crore per year. So is that from the second year onwards, from the implementation?
Once we reach the 1 million, I'm just giving you the maximum what we can receive in a year. Once we complete the 1 million meters, but the revenue, this recurring revenue starts once we do the 5% meter. And after every 5% meter, the UAT is done, and once the UAT is done, the meters go live.
Okay. So this is the operation and the OPEX returns, which you can say.
This is the OPEX return, yeah.
Okay.
Once the 50,000 meters are completed, the revenue will start coming.
Yeah, 5% of the total.
Yeah.
And so because this is also under the RDSS scheme, so the state government will be getting the grants of 15% and the incentives as well from the state, from the center. So
RDSS also, there are multiple. It's not that the RDSS is one size fits all. They have given the guidelines to like this particular order. They are taking some money from NABARD also. They are taking some money from government also. So it's not that in RDSS you can't take money from different. In this particular tender, 10% is advance and 22.5% is capex. So almost 30-35% is paid upfront once you supply the material.
Okay.
So every RDSS project will be different from each other. It's not that only one type of funding or only one type of tenders will be floating in the market.
Okay. So which are the other states which will be quoting their tenders in the next 3-4 months?
I would say most active currently are Maharashtra. Bihar is coming further with some new tender. The most active currently are Maharashtra, Andhra Pradesh, your Rajasthan, UP. They are most active states currently, and Assam. But almost every state has come out with some tenders in Madhya Pradesh. So, but almost every, in almost 16 states, the IDSS scheme has been approved. So you will see almost every state is coming out with some tenders in the next 3 to 4 months.
Okay. So next question is on our FMS target. So you have said that you are targeting to increase your recurring revenue. So could you give us some guidance on, firstly, sir, what is the current order book of FMS, and any guidance which you can give on that particular part of the business?
So current order book exact number, I'm sorry, I'm not in a position to give you exactly the breakup of how much is the FMS. I don't have it offhand with me.
Yeah.
So I can let you know. And target wise, we as such we have not targeted anything, but even as a meter vendor, wherever we are quoting, we are taking the FMS work from the AMISP. So as a company, we have a special focus on the FMS revenue because it gives us two advantages. That we are connected with the project till the end of the project. We're just not only a supplier, we have supplied the material, because in smart meter we have to service that for 10 years, whether you do it as a AMISP or you do it as a meter manufacturer. So we always take, we are targeting contracts where we take, even as a supplier, even if we are only a supplier, we want to do the FMS part so that our customer is also happy and we are also taking care of the project for next 10 years.
So just one question on coming back to the AMI order which we have got. So all the 1 million meters will be the smart prepaid meters, is it? Or
all
will it
the
be
meters will be smart prepaid meters.
prepaid? Okay. And so one final question.
I just want to, for the interest of everyone, a smart meter can be prepaid, postpaid online. So it's not a difficult for people like us. But all these are going to be smart prepaid meters.
Sir, one final question. Sir, where are we currently on the restructuring part? So what is the status? If you could just give us some details.
I think within next 3 months, by next quarter, I think that will be done, completed.
Okay. Thank you so much, sir.
Thank you.
Thank you. The next question is on the line of Jainam Gilani from Moneybee Advisors. Please go ahead.
Opportunity. I'm a little new to the company, so pardon me if my question goes somewhere. I just wanted to know that you mentioned that our capacity is right now 11 million units, which is for conventional meters. So what would be the capacity in terms of smart meters? Like, do they take the same time in assembling smart meters and conventional meters?
They don't take same time in assembly, but we have already upgraded our facility. So when we talk about capacity, 75 to 80% is the capacity for the smart meters. So when we say 11 million, 75-80% is the capacity for smart meters.
Mm-hmm. And so basically, since we're new, you can say by ramping up, can we run for 50 to 60% utilization in FY23 for smart meters once we start the orders for the smart meters in September?
For the full financial year, 50-60% is, I won't say it is impossible, but yes, because first 2 quarters are going to be difficult. Reason is components availability.
Okay. And so the order that you have received from Bihar, so for 828 crore, so what would be the timeline that would be required to execute this order?
So 30 months is the timeline for installation, and thereafter 90 months for your recurring revenue.
Sorry, sir, I couldn't get your voice, so could you repeat, please?
2.5 years. 30 months for the installation and supply, and 90 months for the recurring revenue.
Okay. Thanks a lot, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Rajiv Rupani, an individual investor. Please go ahead.
Yeah, thank you, sir, again for the opportunity. My question is, during the call you mentioned that Adani and Tata Power are taking interest in AMI SP. So would they be procuring the smart meters from us?
Yeah, people like us. And currently there were 2-3 bids which they quoted, which they could not win, but they are quoting with people like us. So surely we'll play a role of being a smart meter manufacturer for them.
Okay. And my next question is, our capacity is 10 to 11 million meters. So what kind of turnover you expect to do with major smart meters being produced at full capacity?
So at full capacity, with if you take a ballpark figure, we can comfortably do 3,000 tons.
Okay. And my last question is, with all the states joining in to procure smart meters, so where do you see the company, let's say after 3-4 years? What kind of revenue can we achieve?
It has to be super optimistic. 4,000-5,000 is a very doable figure, but yes, since the past 2 years has been very difficult, any number I don't want to speak. I want to prove it first before speaking the number.
Okay, thank you. All the best.
Thank you.
Thank you. The next question is on the line of Swati Jhunjhunwala from VT Capital. Please go ahead.
Good afternoon, sir. So most of my questions have been answered. Just one thing I missed. Could you give the revenue guidance for FY23, please?
I gave it in the beginning itself. It is around 1,200 crores.
Okay, thank you so much.
Thank you.
Thank you. Ladies and gentlemen, that was our last question. I now hand the conference over to the management for the closing comments.
So thank you, ladies and gentlemen. We apply our deep industry domain knowledge to manufacture quality products and successfully resolve our clients' challenges. So we are confident of delivering sustainable growth as it is on the back of robust processes. With rapid adoption of smart meters over the coming years, we are committed to continuing to deliver top-notch innovative smart metering products to meet evolving demand in the Indian marketplace. We shall continue to raise the bar and strive to maintain the leadership position. In case you have any further queries, please get in touch with SCA, our investor relations advisor. Thank you, everyone. Take care. Be safe. Jai Hind. Thank you.
Thank you, everybody. Thank you.
Thank you. Ladies and gentlemen, on behalf of Genus Power Infrastructures Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.